If you can just start by telling us for your own company, what have the orders been up until now? Of course, it's been slow because of the lockdown, etc. But since reopening, what have the orders been? And purely from this Har Ghar Nal Se Jal program from the government's end, what do you think the potential opportunities could be?
Very good morning, Sonia. As you rightly mentioned, this Har Ghar Nal Se Jal, it has a major outlay of around 50 billion USD as far as Indian market is concerned. And I think the government has gone on record that, in spite of whatever slowdown in economy is there will be no cut on the spending in this particular scheme. So I think there are a lot of opportunities here, which are, for pipeline distribution, house connections. And I think in spite of COVID, we realized that, there has been a substantial progress made by the government. Now, coming to Tech WABAG, I think where we see an opportunity is that we are not purely a construction player, we are more of a technology player. So as and when, for source augmentation and when, since the water demand is likely to go up, so when source augmentation is required and, where technology is involved, I think Tech will definitely participate in that. And, maybe we have a huge coastal line, we see an opportunity in desalination, there's an opportunity in, treating the water wherever it is available and transporting it to, various locations. So definitely we see that we will play a significant role at that point of time. And today, whatever pipeline, and it's pure construction play, and Tech is more focused on the technology orders.
All right. So do I understand, Mr. Chopra, that at the moment, Nal Se Jal is not yet hitting your P&L in terms of anything substantial? Can you tell us your orders itself then? How has the order book looked up until December? And where would you be L1 or something for some guess of the year end?
See, Lata, as far as order book is concerned, if you would have seen, we have a very, very strong order backlog. We have around 10,500 crore worth of order backlog as of, September end. And out of that, around 70% is, EPC and 30% is operations and maintenance. So we have a clear-cut visibility as far as order book is order execution is concerned. We have around 2.5 years of order backlog as far as EPC is concerned, and more than 5 years of order backlog as far as our O&M is concerned. Now, coming to the first half, we were successful with around 630 crore worth of orders. And going forward, we see that there is a little bit of traction which is happening as far as, industrial orders are concerned in India. But Tech does not operate only in India. So we see that, going forward, we are likely to be successful in some orders which are there in Middle East, which are there in Europe. So these are other markets where we have significant presence, and also Africa.
Okay. So
I think whatever our current focus for this particular year is more on the execution with a comfortable order backlog.
Okay.
And we are very, very selective in picking and choosing.
Okay. So
if you are asking for immediate this thing, I think there are some very large orders in the pipeline, which we are expecting the tenders to come before March. I think we have a large desalination plants in, Tamil Nadu, Chennai being the largest. We have very large, wastewater treatment plants coming up in Mumbai. And I think other, core strengths of WABAG, where technology plays a key role, is recycle, reuse. So recycle, reuse and desalination, as far as Indian market is concerned.
Oh.
I think Tech will be the front runner.
Okay.
In that, because of very strong credentials and technology backup.
Okay, but since these would be largely government, are the cash flows smooth, and what would therefore your net margins be?
See, as far as these orders are concerned, from our current backlog, I think if you see our H1 performance, we have reduced our receivables. Our cash flow has been better than before. And today, our major order book, which we have today, it is funded by, multilaterals. So we don't foresee any challenge as far as, collections and cash flows are concerned going forward.
But the receivables, the trade receivables are still quite high. I mean, it's come down from 1,600 crores in March, but it's still at around 1,400 crores. Are you facing some headwinds there?
I think I'll come back to again a point where we have one major receivable. Other than that one particular major receivable, I think if I look at my balanced core business, which is more focused on water, I think we are pretty comfortable. If you look at our working capital, it's just 83 days, and it can fluctuate 5-10 days plus minus going forward. And I think we are in line with whatever the industry standards are there. But yes, definitely, it looks a little lopsided because of one particular receivables.
What is the likelihood that you will be able to complete this year at least flat with FY20 in terms of revenue and EBITDA?
I think I don't have to say that. I think you people can guess it better than me. The reason being that at H1 point, we are just 5% lower. We have a strong order backlog.
Okay.
Our construction activity in India is almost touching around 80% now. First quarter was on construction, a literal washout.
Okay.
And as far as overseas is concerned, in our overseas projects, we are progressing at more than 90%. So I don't foresee any reason that we will not be flat or little positive by the end of March.